Hi, I'm Ashley Daswa, Senior Investment Specialist at Sanlam Corporate Investments. I will be delivering an update on the fourth quarter on the global and domestic market performance and the macroeconomic factors that influence investment returns. The final quarter of 2023 saw a synchronized rally across global bonds and equities as falling inflation in many economist-led central banks to continue to pause their interest rate hiking cycle and start to look towards rate cuts, particularly in the US. This occurred despite geopolitics, the war in Gaza and Ukraine, casting a shadow over global markets. Global equity, as measured by the MSCI ACWI, delivered 7.8% in Q4 in ZAR, and global bonds produced 4.9% respectively. For 2023 as a whole, global equity returned excellent 31.3 in Rand, boosted by the Rand depreciation. Meanwhile, in South Africa, the FTSE All-Share Index posted 6.9% return and somewhat stronger than other emerging markets. Gains were propelled by a stronger 15.2% rebound in the All Property Index over the quarter and 11.8% from financials, while industrial delivered 5.9%, hit by a sharp fall in Naspers and Prosus in December, and resources were flat at 0%. South African bonds delivered an impressive 8.1% for the quarter. This saw the yields on the 10-year government bond tumble from 11% at the start of the quarter to 9.8% by the end. Meanwhile, the Rand gained 2.9% against the weaker US dollars in Q4, but in total lost 7.5% against the US dollar, 14.1% against the UK pound, and 12.1% against the euro in 2023. Global bonds experienced a very steady volatile year, marked by a rapid shifts in the interest rate outlook and investor sentiment that pushed the yields on the benchmark 10-year US Treasury bond to 5% briefly in October and left it trading at 3.8% at the end of the year, presenting opportunities for active investors to harness attractive above-inflation yields. Ultimately, global bonds as an asset class returned 5.7% for the year. The story of the year has been interest rate. At the start of 2023, most economists were convinced that a US recession was imminent. Rising interest rates have managed to slow inflation with a resilient labor market, leading to steady consumer spending and GDP growth. At its December meeting, the Fed revealed that it expects inflation and interest rate cuts to decline in 2024 and open the door to interest rate cuts in 2024. While not following the Fed directly, the South African Reserve Bank tends to tie closely to the moves in the US, largely because of the significant impact these rates have on the global market and the rand subsequently and inflation. No further rate hikes are expected in South Africa under the current forecast, with the rate cuts anticipated by the second half of 2024. The IMF forecasts a slight decline in global growth to 2.9% in 2024, down from 3% in 2023. Growth in the South African economy decreased by 0.2% in third quarter of 2023. This figure represented the South African economy first drop, with GDP growth having been 0.4% in the first quarter and 0.5% in the second quarter. Load shedding remained a bind on growth, as did Transnet enormous and worsening logistical problems, which also negatively affected state revenues and foreign investor sentiment. In summary, most investors, 2023 marked a much-needed comeback when it came to both stocks and bonds market performance after a brutal 2022. Looking ahead, the South African economy and global market performance and macroeconomic outlook in 2024 will be shaped by global economic trends, geopolitical developments, domestic infrastructural challenges, effective government implementation of reforms, commitments, and the pending election in this country. Thank you.